I think the dollar is going to be rejected on the global stage, and the majority of Americans won't even know it.
This video is brought to you by Reluctant Preppers. Click here to subscribe for free to reluctantpreppers.com. Speaking of JP Morgan's $9 billion of losses, you've said that it seems like there are wide banking failures in progress right now. Did you want to talk a little bit about that?
Well, you mentioned $9 billion. That's what JP Morgan claims their losses was. But if it was really the $100 billion or anywhere near that or multiples of $9 billion, you've got some severe problems of insolvency that might whack their liquidity. So what's going on, I believe, on a wide basis with the major banks, when the major banks don't just include Wall Street and London, they include a number of other ones like Societe Generale in France, the Bank of Cyprus, one of the biggest banks in Portugal called Espírito Santo. They include other banks that are in trouble, that are subsidiaries of the London banks that are operating in overseas markets, overseas locations. One case is Barclays bank called Coutts. These are all banks that are going under. What I think has happened in the last several months, if not over a year, is that the derivative damage is starting to sap the capital out of these big banks, affect their liquidity. I mean, there's an old saying that an insolvent bank that suffers illiquidity goes bankrupt. So, put it in math terms, insolvency plus illiquidity equals bankruptcy. I think the derivative problems related to the Federal Reserve and QE and Treasury bonds and outrageous deception on U.S. government debt. I mean, how many times do we need to see that the U.S. government declares that it has $700 or $800 billion in deficits for the year, but then later it's revised to 1.06 trillion? So they lie on the near term and revise on the downturn, on the long term, and they hope that their revisions to bring it back to reality find you asleep at the wheel, just like their revisions for job creation and job losses. They lie on a monthly basis with the non-farm jobs payroll, and then in March they do a revision and say, well, it was really 400,000, really 372,000, really 296,000 jobs more that were lost, and we hope you're asleep here. No, this is pathetic. We've got a bunch of banks that are in the process of going under. Banco Espírito Santo had a big bond downgrade, a debt ratings downgrade, a write down of their bonds, and they just asked for bankruptcy protection. Coutts, subsidiary of, I called it a subsidiary of Barclays. It's a Royal Bank Scotland subsidiary. They're going under. They're up for sale, but they're going to go under. Maybe not right away. Societe Generale, they're in deep trouble. Barclays is in deep trouble, kept alive only by free money that's being put off the press. And the Bank of Cyprus, even though they did some bail-ins, what was that, a year ago, March? I guess they didn't fix anything. I'd like to point out just really quickly that there's a common theme between Cyprus, Syria, and Ukraine, and that is Gazprom, the Russian gas near monopoly, global monopolist, natural gas producer and pipeline builder and owner and supplier. Gazprom Bank is a huge bank in Cyprus. It's also a bank. They got a bank in Cyprus. Gazprom Bank is a big bank. What do they do with all the money they gather in with their gas sale? Well, they put it in a bank. The Russians were using Cyprus to convert treasury bonds into gold. So in March of 2013, the U.S. interrupted it. So you can see that the U.S. is doing things to respond to conversion of treasury bonds to gold. In Syria, it was much similar, very similar. The Iranian gas pipeline was going to go to the Mediterranean coast and supply, through Gazprom system, the Iran gas was going to supply Europe, and the United States didn't want that. So they don't want to have Iran integrated economically with Europe. And Gazprom's involvement in Ukraine is right up front, central. If you can't figure that out, you're just saying, oh, those nasty Russians. You're an imbecile. But let's face it, I think a third of the United States is absolute moron imbecile for observing and watching and making conclusions and forming opinions about what's going on with this war. I talk to intelligent Americans who believe that Russia invaded Ukraine and killed a lot of people and overran Crimea, and aren't they nasty? Gosh, wake up. So there are a lot of banks that are going under, a lot of banks that are experiencing failures in progress, and you're just not being told the correct story. You're being told a very slanted, distorted version. And I feel sorry for you for believing him.
Moving now to viewers' questions. This viewer wants to know if you see bail-ins coming in the near future to the West. This viewer says they've already had trouble withdrawing around $5,000 in cash, waiting up to a week for the money.
There is a link between the illiquidity of the big banks and the motive to do a bail-in. They're the left and right hand side of the same hammer. I'm hearing stories as well about difficulty in withdrawing one's own funds from accounts, limits, time delays. You can only have a portion now, and you must keep the remainder in the bank. Trying to cash checks. I'm even seeing some cases, which is not exactly what we're talking about here, but still worth mentioning, that some of the big banks, in particular Chase Bank in California, is refusing cash deposits unless you're an account holder at the same bank. And they're giving a reason of trying to obstruct money laundering from narcotics organizations. I think you're seeing that in California more than New York and the Midwest, or even Florida, because California is where Mexican drug cartels would do some money laundering. But it's hard to know regarding these bail-ins. If they start bailing in a number of big banks and do, say, even a 5% confiscation to help their liquidity, it's not going to add up to much. If you take a look at all the savings that are in U.S. banks, take 5% of it, it's not going to amount to a hill of beans. So what they really need to do is confiscate the pensions. If they're going to do a serious bail-in, they might want to test your response to see how asleep you are. And I believe that, not necessarily the listeners here, but their neighbors are asleep. They're dumb, they're fat, they're asleep. And they're very distracted by just trying to get along, holding a job, raising a family, trying to manage the bills, making sure the car gets repaired properly, and just making sure everything hums along. But if they're going to do a serious bail-in, then they might want to go after the $18 to $19 trillion that are sitting in the pension funds, the private pension funds. I'm referring to 401ks, I'm referring to IRA, I'm referring to KEO, I'm referring to the corporate managed accounts, pensions. They might force them all to be treasury bonds and take some of that diverted money and put it into the major banks of the United States. Look, we refuse to liquidate and declare failures these major U.S. banks. We refuse to go back to the gold standard. And as a result, the entire savings of the U.S. population is at risk of being confiscated, written down, or evaporated.
This viewer is wanting to know if, as well as 401ks being confiscated, if land or property could also be confiscated.
I do not think on a grand basis that land and property will be confiscated. I do believe, as exceptions, though, if there's a particular piece of property that adjoins a major energy deposit or a giant aquifer water supply, then those properties might be at risk. But to answer your question, no, I don't think that land and property, like say an office building, would be at risk for confiscation. The other property that will be confiscated, I think, will be mining stocks. I think mining stocks are going to be taken over. And they really don't need to take over much of the smaller companies because they're all going to zero. I said back in early months of 2008 to my clients to get rid of them. And I think it was a very good call. The ones that are going to survive among the mining stocks are going to be the very big companies. They've got these legacy projects and, you know, they're lower cost and they really should go on strike. The mining companies should go on strike and not supply the COMEX at all. But they've got their obligations for debt and, you know, projects under contract. But I think land and property will be pretty much safe unless it's an exceptional case.
This next viewer wants to know your perspective about investing in precious metals versus investing in property.
I personally would rather precious metals. Let's suppose you buy property. Well, there are two kinds of property. One is property that's yielding farm output, or property that's just idle. It's got potential for farming and has potential for, say, forestry, you know, cutting down trees and selling lumber. I don't want to get into property that's got energy deposits because that's a different kind of property. But if you have the option of buying property or buying gold and silver, of gold, silver, and farmland, I would think at this point I would go 80% with silver, 19% with gold, and 1% farmland. Maybe zero farmland and 20% gold. I get the question often, which do you like better, gold or silver? And I always tell them 80 to 90% silver, the rest gold. And then they always ask the same question. I mean, I just got this from a client a couple of days ago. I say that central banks own a lot of gold and no silver. Industry requires a lot of silver and no gold. So if you're any kind of a student of supply and demand as it applies to price, you see that on supply side, silver wins. On demand side, silver wins. What's complicated about this? But if you're going to do farmland, you got to ask the question, well, can I sit on this huge investment for idle land? Well, I wouldn't want that huge amount of money to have no return for months and months and months and have some property tax. Bear in mind the property tax for farm acreage is very, very low. I don't know exactly, but if I had to guess, I would say it's like 3 to 5%. Of city property or suburban property, maybe even lower. But then if you want to operate it, then would you buy the farmland with someone who was already like a renting farmer? And you offer the renting farmer 30, 40, 50% of profit? Like that's what a sharecropper does. Well, that's viable, but I wouldn't want the complications of farming unless I had a Chinese client. By the way, the Chinese are buying up alfalfa farms in 7 predominantly western U.S. states. Alfalfa. And they're converting it to hay, and they're sending it to China to feed their livestock. So you're already seeing the early effects of exporting U.S. output in the form of farmland output to foreign nations, in particular China, not necessarily to raise foreign currency, but to meet owner desires, not obligations, but desires. So the U.S., like Venezuela, I think is going to lose a good portion of its farm output to Chinese desires and later to just plain old raise revenue and reduce the deficit. So this is how shortage is going to come to the U.S. economy. I don't hear any other analysts talking about upcoming shortages to the U.S. economy. I may be missing a couple of authors, but I just don't see it. Shortages of supply in the United States, higher prices from the dollar losing its precious, privileged status as global reserve, and violence in 3 centers in the United States. Violence at food centers, violence at fuel, like gasoline centers, and violence at cash ATM centers. Shortages, prices, and violence. That's what's coming in the United States. You better be prepared. Most will not be prepared. Most don't have enough money to be prepared, let's face it.
Hey everyone, that's it for part 3. Make sure to click here to subscribe so you will be notified when part 4 is released. This video was brought to you by ReluctantPreppers.com. Click here to watch Reluctant Prepper's encore presentation with Ann Barnhart, where Ann Barnhart, founder of Barnhart Capital Management, exposes the hidden risks lurking in almost all of the usual places you might think it's safe to stash your family's nest egg.